Good day, everyone. I'm David Paul. I'm the Managing Director of VectorVest in the UK. At VectorVest, we simply believe in buying undervalued stocks that are rising in price when the general market is rising in price. And I'm going to start with the general market. And on the first slide, that's the UK market. It's the VectorVest composite of the UK market, which is an equally weighted index of all of the shares that we follow on the LSE and AIM, some 2,200 stocks. And that's the picture over the last 6 or 7 months. We had a sell signal on the 5th of October, and as you probably all know, the market fell quite hard in October, November, December. And then somewhere between Christmas and New Year, the Fed in the US changed their mind, and on the 9th of January, we in fact got a long-term confirmed signal up, and that led to a really nice move up in the market in January, February, March, and April. And a few days ago, we got a sell signal short. So at the moment, the longest term measure of the trend in the UK market is down, and we advise not buying stocks at this time. In the US market, which is in the next slide, pretty much the same picture. We can see that red triangle, which marks the confirmed down signal in October, and then again a buy signal in the first week odd of January, and similarly a sell signal a few days ago. VectorVest does not believe that we should be buying shares at this time, sitting waiting for the trends to turn back up again. Now, those longer term signals, which we refer to as confirmed calls, are the basis of our worry-free investing plan, which is a plan that I've tested over the last 25 years, and it has a robust track record of making money in both the UK market and in the US market over that period. It finds the safest stocks on the London stock market to invest in. And at VectorVest, we have a metric called relative safety, which I've defined on the next slide. Relative safety, we look at the balance sheet, the income statement, the cash flow statement. We look at earnings consistency, we look at the company size, we look at price volatility, we look at how long the company's been around for, and we look at dividends plus all those financial ratios. And out of all of that, we make a judgment on a scale between 0 and 2 as to whether the safety and the predictability of the earnings are good or not. And on a scale between 0 and 2, above 1 is fair, and above 1.3, this is a company that's making money, and all of those financial ratios are in fact improving. And in our worry-free methodology, we sort all of the shares in the London stock market by relative safety, and we bring those shares with the safest track record of making money to the top of the pile. The methodology is quite simple, and in the next slide that's reviewed. When we have a confirmed up signal, and we haven't got one at the moment, we got the last confirmed up was on the 9th of January. We sort all of the shares in the London stock market by relative safety, and we buy 10 of them, not buying any more than 2 from the one sector of the economy. If the general market is going up, there's a very slim chance that one of those shares can in fact disappoint. If it should and hit its stop loss, we exit that particular share, we run the sort again, we run the search again, and we replace. So when the general market is rising by our confirmed call system, we're always fully invested. Now, sooner or later, there's going to be a confirmed down, and we had one of those the other day. In a confirmed down, then you're much more likely to get stopped out. If you are stopped out and the general market is falling, we build a cash position, we do not replace. When we get the next confirmed up, we run the uni search again, and we make sure that we're fully invested. It's as simple as that. I've tested this over the last 25 years, and in the US, you get a trade pretty much on average every 6 weeks. So not that much activity with the methodology. In the next slide, I'll show you the objectives of the exercise. The objectives clearly are capital appreciation and dividends. Most of the high RS stocks pay a fairly healthy dividend. And in an environment where the retail trader can actually sell options, you can make an additional options income stream by selling covered calls. Much more difficult to do at the retail level in the United Kingdom as opposed to in the US, where it's quite common for retail investors to employ a very conservative option strategy selling covered calls. So in the UK, capital appreciation and dividends, the objectives. And in the next slide, we'll get an idea of the search that I use. I call it long-term winners. It's built into VectorVest. I'm looking for a share that's above 50 pence, that's got a reasonable volume, and not on AIM, just on the London stock market. The share price must be below the VectorVest valuation. We favour buying shares that are trading below their value. We firmly believe that the only way to make money in anything is to find the value of something and then pay less for it. And the stock's recommendation should not be on a sell. VectorVest puts a buy, sell, or a hold to every share every single day. And in this particular search, we clearly don't want the share to be on a sell recommendation. So it's either on a buy recommendation or on a hold recommendation. Now, I ran that when we had our last confirmed up on the 9th of January. And I've done a simple linear test of the shares that we found on the 9th of January to see how they've done until yesterday. And in the next slide, the performance is shown. I've looked at 15 stocks, and out of those 15 stocks, it's quite easy to find 10 that are in fact where there's only 2 in any one sector. But I've looked at 15, so that can be done relatively easily. In that period, since the 9th of January until yesterday, the market was up 5.63%, and our top 15 stocks by relative safety in the same period was up 15%, which is a 3 times improvement over the general market. And as you can see, there's not a loser. And there's nothing better than coming to your portfolio every evening and looking down and only seeing green. It adds a great deal of enthusiasm to the process, and the process of investing grows and grows and grows. So our worry-free investing system is fully explained. On the 1st of June, I'm running a seminar in central London, and I'll explain the worry-free investing plan, plus many other more short-term investing stroke trading plans in the morning. It's run at a central London location. If you go to vectorvest.co.uk and just click on live events, you'll get all the details. I look forward to seeing you there. Thanks very much. Have a great trading day.